All right, welcome back to the channel. It's been a while since I did a video, and this one is we're going to go back and take a look at trading with Mike. MMT, moron Mike trading, mental Mike trading. I don't know. Give me your ideas in the bottom. So be careful with gold and rate cuts. Here we go again. You know what mental Mike does consistently? He consistently never looks at the data. He's the guy that tells you he's right, everyone else is wrong. And even when other people get it right, the direction of a given trade, you know what Mike says? They're lucky. So it's heads I win, tails you lose. You know, moron Mike here. You know what the guy does. He plays tennis without a net. Guy probably hasn't had a gold position in forever, but let's talk about it. And what's he doing now if he does? Who knows? Be careful with gold. Boy, that's actionable, isn't it? Be careful with gold. Well, I don't know. If you're long gold, what should you do? Well, you should stay long and wait till it pulls back far enough that it looks like maybe that trend has ended. Now, maybe it stops you out, it pulls back, it dekes you, and then it starts to head higher again. Well, then you just get long. And if it stops out and it keeps going lower, at some point you're going to get short. That's what you do when you look at the data. And you don't give a shit about the mental Mike trading stories and all the nonsense narrative. So be careful with gold and rate cuts. You don't have to be careful if you've been long this thing and you've got stops in. Hell, you could be short today. You don't have to be careful. Put a stop in. That's the carefulness is taken care of already. So what is Mike trying to tell you here? Well, first of all, again, I doubt the guy has a position. He never tells you. He never tells you what end is up with his trading because he doesn't have a system. He just comes out here and makes virtual daily videos. And at some point, he's going to get something right because random dart tosses will eventually hit a bullseye. And then he gets to say, I told you so. And other people in the comment section point out, well, hey, all these guys got the same trade. They've been in the trade. Well, they just got lucky then. All right, this is tennis without a net. This is just a total lack of logic from an old fucking crusty fool who had his last novel idea about 30 years ago. And now he doesn't use data. So any bullshit that he fucking wakes up thinking, he's not going to check against actual data. He's just going to start running his mouth. And he understands. And of course, you do not. So this is a perfect example. Be careful with gold and rate cuts. Well, folks, I'm going to give you the facts that mental Mike never will. So this is a response to this video here. By the way, I'd love to respond to him directly with the facts. You know what these peasants do. You know what these whiny little bitches that can't stand any pushback with actual data, they just block you. Mike Norman is just a bitch. So let's take a look. On the right is the federal funds rate for the last 25 or so years. On the left is the price of gold in blue, and the roll value are these red stems. Now, why am I showing you the roll value? Because the roll value of a futures contract, as any futures trader can tell you, is 95% plus a function of current interest rates, short-term rates at that. Let me prove that to you. On the right is the interest rates. We want to correlate the interest rates, the Fed funds rate, with the red stems because those are the roll values of gold futures contracts over the last approximately 25 or so years. So you can see the roll value in early 2000 was at this level with the interest rates at this level. And by the way, this is a correlation, what we're doing here. As interest rates fell from 2001 to 2004, you do see the roll value fell off. Now, it's not large here, but you do see it fell off. As interest rates started to rise from 04 into 08, what do you see? All right, the roll value increasing because it's a function of interest rates. This is step one of two, where I'm going to show you cleanly what Mike Norman continues to just not understand. This is why I've told you before, 40 plus years in the market, this guy has learned jack shit. He stopped thinking 30 years ago, possibly longer. As we get into the GFC, interest rates are crushed down to 2010. What happens to the roll value? Crushed to 2010. We go basically sideways on interest rates and roll values a little bit here. What happens in 2016? Look at the right. We start to increase interest rates. 2016, what happens? Roll values start to go up. We come to C19, 2020, down in the dirt. What happens? Roll values go down. 2022 and beyond, up until current, Fed funds rate increasing. Look at what happens to the roll value. So you can see that the roll value is a function of interest rates. So everyone got that. This correlation, I didn't do it here, it's probably 90+%. So let's move on to step 2, and we'll go wide on this thing. So if dipfuck Mike Norman, right here in the title of a recent video, is telling you be careful with gold and rate cuts, meaning rate cuts cause the price of gold to go down. This is what he's telling you. All right, you can see that these red stems are basically rates rising and being cut. Let's take a look at this area right here. Rates were going down. All right, rates dropped and then they stayed low. What happened to gold? It went up. And then gold went down with rates still down. So here you have a function of no correlation whatsoever. Sometimes positive, sometimes negative, or at least flat to positive. And what have you seen since? Well, increases in rates did correlate with the increase in gold. But don't conflate the two. The correlation here between the red stems and the price of gold is about 0.07, meaning dipfuck Mike Norman, magic Mike, moron Mike, mental Mike, you can give him hard numbers and he will just say, no, that's not how it works. Why? Because mental Mike has drank the MMT Kool-Aid and he gulps it to the point where he no longer has any grasp on reality. And anything he sees, he will just ignore the actual data and twist it into something that aligns with his current belief system. It doesn't matter that the facts don't line up. Mental Mike here will never understand that because he's a crusty old man who, again, his last novel idea was 30 plus years ago and he refuses to correct himself. If what Mike was saying here was correct, the correlation between the roll values, which are a proxy here of the interest rates going up and down, would correlate with the price of gold. And it absolutely does not. You can do this. You can check this for yourself. The correlation, positive 0.07. That is no correlation. I can go in through here and pick out certain times where it correlates. But if the entire run of 25 plus years has a correlation of 0.07, okay, that tells you I can go in here and just as easily pick out an inverse correlation, where everything he says is completely backwards. What Mike is trying to do here, I think, because look at the price of gold. Would you not expect a pullback at some point soon? Right. I would too. Does that mean you go short here? Hell no, folks. Hell no, folks. Wait for it to give you a reason to go short. Don't try to top pick, because I can tell you people that think like that, which by the way is exactly how Two Tick Nick thinks, were burned on gold way down here months and months ago trying to top tick it as it only went up against them. Remember, that's when we were long gold. Stopped out because it pulled back. It was a psych out. It broke out again. We got long again, etc., etc. The rest is history. I've shown you that this year. That's the type of trading that works. Not the Two Tick Nick, not the mental Mike here trying to be a hero and pick the top of gold just because, well, I suspect if you go out a number of months, gold's going to be lower at some point than it is today. Does that mean it's a trade short today? Hell no. Stop with that nonsense. His premise is wrong. 0.07 correlation does not imply at all that gold and rate cuts have any link, because they don't. What Mike is trying to do here is to top tick something so he can do what he loves to do. I told you so. See, I was right. Everyone else was wrong. Who is this everyone else, people? This is what I want to know. I don't follow this type of stuff, this correlation, because I know it's bullshit. Did I have to know it to get long gold this year? No. We just deal with hard numbers. Mike refuses to deal with hard numbers. He fails to use good sense. Look at the data, see what it says. There is no way anymore that any responsible person could actually follow this old dumb clown, given just how easy it is to point out how wrong he is on a consistent basis. If gold drops now, he's going to come out and say he's right. It in no way confirms his story. So if he wants to be short gold, then just be short gold without the story, because your narrative is completely incorrect. So I wanted to point that out. Very simple. By the way, do you want to know the type of people that are serious about making money in the market? People that can show you data like this on your screen, because they have it at their fingertips and they can very easily answer any query that you have on a given security. Does this affect this? What's the correlation of this versus that? Very simple. This took 5 minutes to pull out and chart. That's why doing it this way, algorithmically, using the data and stopping with the nonsense and bullshit Kool-Aid drinking mental Mike process of trading doesn't work. It's stupid. This is why he'll never show you a portfolio. This is why he doesn't give calls. And I've said it before, the only thing that makes mental Mike better than two-tick Nick is mental Mike at least had figured out a long time ago that you just are long the market a lot of the time. But mental Mike still likes to do the see I told you so. So he fearmongers you every few weeks when it looks like you might get a 0.5% pullback or a 1% pullback in the market. Because why? He wants to say, see, I told you so. I got it. Folks, it's bullshit. Trying to use MMT for trading is a failed process. It's a lost cause. It's laughable. But when you've drank the Kool-Aid that old man Mike Norman, old man mental Mike has done, there's no coming back. You're done. And by the way, I'll end with this. Mike, I understand, because the last thing you need is more brain damage, because you already have too much, evidently. So I hear this dumb clown, this dumb old crusty leathery clown, has decided to go boxing with the young bucks, the 20-year-olds. Let me give you some advice, you old fool, since there seems to be no other adults in the room with you ever. Mike, you have seen over the last 10 years, you can't even go for a jog half the time without wiping out on your face and ending up in the hospital. You old fool. If you want to do boxing, the training portion, the rope skipping and the bag work, if you need to work out some sort of anger issues, it's a great way to do it. Pound the shit out of the bag. It doesn't punch back. And that's the point. It's great cardio. It's nice hit work, if you will. Do the training. Skip the sparring. The last thing your fool-ass brain needs is to get pounded once too many times in the freaking head by a 20-year-old who's stronger and faster and better. They're probably pulling punches because they see this old guy in there and they need to humor him. They can't tell him, go away, old man. So they pull their punches because they don't want to snap your freaking body in half with a real body blow or a nice head punch. It's a young man's sport, and it's even bad for them. Stop being a dumbass. Let me be the adult in the room that you need but never get, which is what happens when you live in a closet for 30 years. Do the training, skip the sparring, Mike. The last thing you need is more brain damage. You're already beyond hope with this mental Mike trading bullshit and all these freaking stories that can be proved wrong in under 5 minutes, right? And there's just an endless sea of things this guy can be proven wrong at. So does this mean that when interest rates finally start going down like they're going to, does it mean that gold's not going to go down or it's going to go up? It doesn't mean anything. It doesn't mean any of those things. What I'm telling you is rate cuts and gold have no correlation. No correlation whatsoever, 25 plus years. Talk to you soon.